Numbers on the face of it were a clear beat. Revenue is up 68%, EBITDA at 226, EBITDA margins at 4.7, but adjusted EBITDA is still negative. Neeraj, I don't know if you want to comment on this, at 8 crores. And I think this is what stood out, right? Margin improvement is still struggling. Dipinder Goel has talked about the fact that the reason that's happening is because they're spending a lot of money in expansion. They're not only adding dark stores, which has impacted the numbers significantly, they're adding their warehouse capacity. And of course, in 4 weeks, you're going to have district that launches. So all of this is big cash burn, right? A few weeks ago, we told you about the fact that they're looking to do an aggressive fundraise of 8,500 crores. That has been confirmed. This is what may lead to some shareholder wealth destruction because they're already sitting on 10,000 crores of cash. They have a significant quantum, which is 10% of their revenue sitting on treasury income. So while the plan is in place, this is an expensive stock and shareholders are not getting rewarded. Active fundraising, treasury, which is probably compensating a little bit of the dip at the bottom line. So all those things, interim jerks, but I still think Zomato is a proxy to Swiggy for retail investors. It's a duopoly. So while it's expensive, yes, but the fact still remains that there is a story, and that is a story you're betting on.
Yeah, I thought the Citi note was interesting, Samina. I mean, and we have graphics for the same as well, but Citi is saying that they are seeing rising, they thought in the con call that there was some alluding to the rising competitive intensity and may not be massive discounts from Blinkit on the quick commerce side, but there could be an issue there, and they are factoring in those in their analysis, but not dramatically. So they still believe that Zomato could clock in growth, but they are certainly factoring in what happens as a result of the rising competitive intensity. In fact, Citi says that we take into consideration the somewhat increased risks in our profitability estimates. Let's see, I was talking to Rhythm Desai yesterday. He mentioned that the one sector where the competitive intensity is very high is not just because of the existing players, Blinkit, Swiggy, Zepto, but 4 or 5 other biggies want to enter the quick commerce space, and therefore that's a pocket.
Natural progression, you would imagine.
Yeah, so that's a pocket you want to be careful about.
It's so unfortunate because it's I mean, we saw the mom and pop stores, so the likes of a DMart getting impacted because of quick commerce, eating their share of the pie. Now we have quick commerce that is struggling because of its competitive intensity it's facing from its peers in the industry. And also the fact remains, and I think this is where I seem to get stuck. So while there is some concerns that growth may slow down, the good news is that Mr. Dipinder Goel is anticipating that and probably then raising those funds because there will be a cash burn, right? If you have to deal with competition head on, I think the strategy for Zomato remains, and we'll understand more about it when we talk to an analyst, is to go out and do whatever it takes to, in order to build on your marketing spends, add dark stores, get your expansion in place, warehousing, availability of stock. All of those things will have to play out. The street may not seem too enthused when it opens up in trade, but we'll have to wait and see how that reaction is.